As coronavirus cases rise, demand for air travel seems to be plateauing, and it comes at the worst possible time for the airlines. Phil LeBeau joins us now with why that is. Hey, Phil.
Hey, Joe, just got the numbers in from the TSA, and here's the news flash. It's not a good one, but not a surprise. Last week, the number of people flying in the United States declined, down 4.6%. It is the first down week in terms of air travel since early April. Overall, in terms of passenger levels, they're down about 72, 73% relative to where it was last year. And the reasons for the air travel slowing down, it's what we've talked about repeatedly. You've got three things happening. One, you've got the spread of COVID-19, particularly in the Sun Belt, anywhere from Florida to Texas out to the Southwest. That has people saying, you know what, if I had a trip, I'm scrapping it. There's also the quarantines that are in effect for the tri-state area. Massachusetts, Chicago has one. That has people in those areas saying, well, look, I don't want to go through the whole hassle of quarantining. I don't know if they're going to come and hassle me when I come back. I'm just not going to make that flight. And you continue to have very weak corporate demand. Against that backdrop, a couple of earnings to watch this week. And by the way, we're getting 5 airlines reporting earnings this week. Let's start first off with Southwest Airlines. We reported last week that 24% of the Southwest pilots as of Friday have said, you know what, we're going to opt out. We're either going to take early retirement or we're going to take voluntary leaves of absence. We'll be getting the Southwest results on Thursday morning. And then you also have United. It's reporting its results tomorrow afternoon. The key stat to watch there, cash burn. United has been very aggressive in bringing down the cash burn rate. Let's see where it is relative to their peers. Guys, big week for the airlines. But again, the first down week since early April, and that is not what you want in the summertime, which is when the airlines were expecting traffic levels to increase.
Hey, Phil, in terms of the cash burn at United, what would be a number or a range we should kind of keep an eye out for? What would be something you would anticipate?
You know, if they were somewhere in that $30 million a day range, I think people would sit there and say, okay, if they were down lower than that, if they were down closer to $25 million. And I know that sounds absurd, but remember, these guys were burning $100 million a day at the end of March, early April. And if they're in that $25 to $30 million range, I think people would sit there and say that's widely expected. And that's really where most of the airlines are right now, anywhere between 20 and 35 million a day.